On the 11th.
The 11th. Okay. Right. Um, okay. Now that my thing is recording, I'm just gonna try to share my screen. Just let me know as soon as you're able to see me.
Yes, ma'am.
Are you able to see?
Yes, ma'am.
Perfect. So we're gonna be doing partnership today. Statement of actions and note. Sorry, so position. Please mute your mic. Uh, okay. And we're gonna be working with Rosie Daisy Blooms, right? That's the name of the partnership. Rosie Daisy Blooms. They said the following information was extracted from the records of Rosie Daisy Blooms, a partnership owned by White Rose and Yellow Daisy. White Rose and Yellow Daisy, right? And then they say required match the description in column A with with term in column B. Write only the correct. Okay. Okay, we're just gonna minus that one. Okay, the first one that we are having here is non-current asset, which term best describe non-current asset in column B? Is it A, the amount is recorded under current liabilities? B, these assets take more than 12 months to be converted into cash? C, the ability to pay off current debts? D, these assets can be converted into cash within 12 months? E, the business ability to pay off all its debts? Or F, gives an indication if the company or the business is financed by its own capital or borrowed capital. Which one is it? Non-current assets.
It's D, ma'am.
D.
Yes.
These assets can be converted into cash within
Into 12
what?
months. 12 months.
What do you mean 12 months? We have two 12 months here. I don't know. What do you mean when you say 12 months? Because we have B and D. Did you say D?
Yes, ma'am. I said D.
This is non-current asset. So when you say non-current assets, or these are assets that can be converted into cash within 12 months. Is that what you're saying?
Yes, ma'am.
Mm. So the correct answer would be B, because these assets take more than 12 months, not within 12 months. Within 12 months is current. So whenever they talk about current, they then within is going to be used within 12 months, right? If it's current asset or current liabilities, it's within 12 months, but it's above 12 months. That means is what is non-current. Current meaning now, currently now, like within this period, within the now period. Okay. And now let's go to 2.1.2 solvency. Solvency, which is going to be the correct term for solvency. Is it A, B, or A, C, D, E, F?
C.
C. And why are you saying C?
Ma'am, can
Yes.
you share the screen?
Yes. No, you can just tell me. I just want to check who's in here. I'll bring the screen back.
Um, Ma'am,
Mm-hmm.
when I said solvency, it means that the business have the ability to pay their debtors for a long time.
Okay. Yes. So solvency simply means that there is or has to do with the business being able to
Exactly.
all its debts, right? Pay off all its.
Yes.
Then let's go to this is three, by the way, and let's go to uh, three.
Ma'am, can I see the screen?
Are you not able to see?
Yes.
Oh, wrong one. I'm sharing. Okay. Is it fine?
Yes, ma'am, I can see.
Mm-hmm. Current asset or current asset.
Current assets, it's D. It's D.
Okay. Mm, okay. Then liquidity. We have what do we have? We have A. We have E F. No, we have A and F. Actually. We have
Um,
F. Mm-hmm.
for liquidity, ma'am, I think we have C. Uh, I think it's A.
Liquidity is the amount in recorded under the current liability. A. I've never seen
Yes,
this.
it's A.
So liquidity is the ability to pay off current debt. That's liquidity. All right.
Yes.
Yeah. So most of the time you hear people saying a company has been liquidated or is in process of liquidation. That simply means that it's using its a business is using its assets to pay off its debt, right? Its current debt. So liquidity has to do with the company being able to pay off its current debt. See? Ne? And then we have
Yes, ma'am.
bank overdraft. Then what is a bank overdraft? Is it A, the amount is recorded under the current liabilities, or F, it gives an indication if the business is financed by its own capital or borrowed capital? What is an overdraft?
It's an overspend.
Okay.
Mm, I think it's F.
F. So bank
Yes.
overdraft indication or does not give an indication if the business is financed by its own capital or not, but it is the amount that is recorded under the current liabilities. So basically, an overdraft is when you're spending more than you have in your bank, in your bank account, right?
Yes.
Which will simply mean that you owe the bank. So w- under the current liabilities, you're going to record that amount because that's how you record your liabilities there.
Yes, ma'am.
Mm. I need to adjust my. We have C and we have A. Right. Are you happy? Do you have any question? Mm,
Um. Okay, ma'am. It's fine.
no questions. Okay.
No.
Prepare the current account note to the financial statement to the statement of financial position on 29 February 2024. And we are not gonna do that. Or should we do that?
Yes, ma'am. We can.
Okay. Because I don't think we're gonna have enough time to do 2.3 and 2.2, like both of them today, because it's already 1:30 now. So which one do you think you most likely to struggle with? Is it the note or the statement?
The notes.
The note, perfect.
Yeah.
Okay, let's see. Prepare the current account note to the financial statement position uh, to the statement of financial position on the 29th February 2024. And then we have additional information here. Let's look at this. This is the note, right? The current account. So we start off with the net profit for the year. For so the net profit for the year is going to be it's going to be coming from another calculation, but firstly, let's try to calculate the salaries, capital, bonus, primary distribution, and the rest of those, right?
Yes, ma'am.
Okay, let's see. 29th February 2024. And then, okay, let's see. We have extract from the post adjustment trial balance on 29th February 2024. We have capital for Rose and Daisies 290,000 and 280,000 for both of them respectively. And then for current account for Rosie and Daisy, we have 67,000, which is a debit for who? For Rosie, and a credit balance of a credited amount of 55,000 for Daisy, right? And then we have drawings for Rosie, we don't know, and then we might have to calculate for that. And then for Daisy is 85,000, and then the bank account has 178,000, and then the petty cash they have 2,500, and then for debtors control 59,000, loan Tulip Bank we don't know how much. And then for fixed deposit, Lily Bank is 690,000. And then creditors control 160,000. Accrued income is 16,000. Accrued expenses 3.5, 3,500 rent. We have prepaid expenses, which is 4,000 rand. And then information A says Rose has increased her capital by 20% halfway, oh, sorry, by 20,000 halfway through the year. This has not yet been recorded. Daisy's capital remained the same throughout the year. You know how is that information going to be useful?
Ma'am.
Do you know how we're gonna use that information? Do we need to write it or we just leave it for now?
The information.
Mhm. They said a capital for who? For Rose has increased by 20,000 halfway through the year. That means 6 months into the year. At the end of 6 months, it was increased. Okay, let's just keep it for now. And then we have the partnership agreement stipulates the following: interest on capital is calculated at 10% of capital balances. Interest on capital is calculated 10% of balances or capital balances. How are we going to calculate for the interest on capital?
We take the original capital multiplied by 15 for both.
Where do you get the 15?
Is the percentage. Oh, the 10%.
What are you going to do with this information here?
You're gonna add it to rows
So when you add it to
to
rows,
days. Yeah, to days and like
Daisy or Rose?
daisy. Oh yeah, let me see. Oh yeah, it's rose, man. Um,
Okay, when
'cause-
we add it to Rosie, what happens?
and then after we add that amount, we're gonna add the capital for rose and daisy, and then we multiply by 10%.
But when you are doing this note, you have a column for Rose and Daisy. So you're going to be calculating for single, for Rose singularly and then for Daisy on the side. You're not gonna combine the two amounts. Okay.
Yes, ma'am.
Okay. What is it gonna be now?
I'll take the amounts for daisy and multiply by 10%, and I will take the capital for daisy and add with that capital down there, which is 20,000, and then I multiply by 10%, and then I
Mul-
get the amount
Multiplied by what?
by 10%.
And how much do you get? How much do you get? For who? What do I write?
Um, for rose, I get 292,000.
292,000. And
Yes.
okay, so for Rose, remember this 2,000, the one that you're seeing over here, the 20,000. So not the 2,000. I don't know where you got the 20,000 that you're seeing here. They say halfway, it was increased halfway, it was added halfway into the year or halfway through the year. So that means it has only been in the business for 6 months, okay? So what you're gonna
Yes.
do, I mean, you're gonna calculate the interest separately because an amount that has been in the year for the whole, I mean, that has been in the company for the whole year is not gonna earn the same interest as the one that just got in, okay? So what you're gonna do, you're gonna calculate them separately. So you're gonna start with the 290,000 multiplied by 10%, and then that amount, which is going to be 29,000, you're gonna add it with what? You're gonna add it with 10% of what? Of 20,000, and then multiplied by 6 out of 12 because it has been in the company or it has been in the partnership for 6 months out of 12 months. All right. So interest that you see, the 10% is 10% per annum for the whole year, not for the amount. Okay. So it's 20,000 multiplied by 10% multiplied by 6 out of 12. Do you understand why we're doing that?
No.
Hmm?
No, I don't understand.
So I'm saying that when you are multiplying or when you're trying to calculate for interest, if you're gonna calculate separately because both the amounts have not been in the business for 12 months. So you're gonna multiply the 290,000 with 10% because it has been that is the capital that was in the business from the first day of the financial year, right? Till the last day of the financial year. So the 20,000 rents, they are saying over here, I'm just gonna highlight it for you. They're saying it was increased when halfway through the year. So if it was increased halfway, that means it was increased in the seventh month of the financial year. So seventh month to 12th month is 6 months. So that means it has been in the business for 6 months. So it is not going to earn the same interest because it was not there from the first day of the financial year. Does it make sense?
Yes, ma'am.
How much is it?
It's 10,000.
It's 20,000. What do you mean
Yeah, it's
10?
20,000.
This is
If
20,000.
I, yes, it's 10,000, but ma'am, I already calculated. I think you wanted the answer.
Yes, I do, but the interest can never be 10,000 when you have 20,000. That's a lot, hey?
Yes.
That's that's a lot. How did you get the 10,000?
I take the 20,000 and said 6 divided by 12.
You take what?
Okay, 20,000 multiplied by 6 divided by 12.
Multiplied by 10%. That is the
Yes.
interest.
Oh, yeah, it's 1,000, ma'am.
Okay, that's much better. So that means it's going to be 29,000 plus 1,000, and then which
It's,
is 30,000 for who? 30,000 for Rose.
yes, we got 30,000 for both.
Uh-huh. That's good. And then for Daisy, it was 280,000, and they said her capital remained the same the whole year. What are we going to do?
Ma'am,
For Rose, it's 30,000 for Daisy. How much is it gonna be?
for Daisy,
Mm.
we are not given the interest.
They said interest
or it should remain the same for the whole year. So their interest, it's 1,000.
For Daisy,
It's 1,000.
1,000. How did you get that?
Okay, for I first calculated the interest on ma'am. So I have to do 208,000 multiplied by 10%.
How much did you get? I can't hear you. Hello.
Yes, ma'am.
How much did you get?
28,000.
Okay. Then we have 28. Oh no. 28,000. 28,000. For who? For Daisy. Then we also have bonus that we need to calculate for. They say Daisy's bonus is 50% more than Rose's. It's 50% more than Rose's. More than that of Rose's.
Yes.
Let's see how much did Rose get for a bonus. So Rose got 25,000 for bonus. How much is Daisy gonna get?
Um, 12,500.
How much and how did you get that?
I take the amount of rows and I multiply by 50. Ma'am, can you hear me?
Yes, I can hear you. You took what?
I take the 25,000, ma'am,
Mm-hmm.
and I multiply it by 50%. That when I got 12,500.
But is 12,000 more than 50% more than 25,000
No, it's less.
less? So what are you gonna do? They said Daisy's is 50% more than Rose's. So that means
Oh,
more
we add 25.
50%.
Ma'am,
Do you hear me?
you cut me.
What? Is it final?
Or if it's 50% more, so I think I will add the
Do you think?
I'll add 12,500 in the amount.
Mm-hmm.
And then I get um I get 35,000, 37,500. Man,
Mm. Well, I'm
am I right?
struggling to hear you properly. Uh,
Um,
what?
um, I'm saying that I will take the 25,000. Ma'am, can you hear me now?
I'm gonna try to leave and then join again there.
Yes, ma'am.
Hello?
Yes, ma'am, I can hear you.
Okay, no, there's no need for me to leave. I just figured my way out. See, are you still there? You said the
Yes,
amount is
ma'am.
37,500 rands.
Yes.
So another thing that you can do, you can just take the 25,000 and then you multiply it with 1,5 because 1,5 is the same as 100% plus what? Plus the 50%, I guess. And then
Yes.
if you change this into whole numbers or into a number, no, sorry, like a number, not a percentage, this is the same as 1,5, right? So you say
Yes.
1,5 multiplied by 25%, how much do you get? 25, 25,000 multiplied by 1,5.
37,500.
37,500. So you're gonna have 37,500 rand like that. Thank you, my lady. So we are done with the capital. Sorry, the bonus. And then let's go to the salary. They say the total salary paid to Rose amounted to 109,000. This included her salary for March 2024. Daisy's salary for the year amounted to 182,000. Both partners are entitled to increase per month on 1 January each year, which has been taken into account. So for this one, Daisy has been paid for the whole year. Okay, so Daisy has been paid for the whole year. So we're just gonna keep it at 182,000, okay? But adjustments are
Yes.
going to be made for Rose. Do you wanna maybe give it a try and maybe tell me how would you do it?
I first calculated, I must calculate for rows.
Yes.
Firstly, I have to divide the 159,000 divided by 12 so I
Okay.
can get how much they
Okay,
get monthly.
now lady. That is not what you're
Yeah.
gonna do in this case because they said there was an increase from 1 January 20 sorry from 1 January. So each and every year on 1 January they get increase of 1,000 to their salaries. So that means 1 January and I mean for January salary and February salary and also March salary there was what? There was an amount that was increased by 1,000 rands. Ne? So what you're gonna do,
Yes.
we're gonna work it mathematically, right? We're gonna try to separate them on. So for let's see, for for 9 months, for 9 months, for 9 months, for 9 months,
Ma'am?
uh, yes, for 9 months, this person was earning the same amount, but then for 3 months, for 3 months, wait. For 3 months plus 1 month, this person actually not for 3 months, but okay, let me write it down so this can make sense now.
Yes.
Okay, so we have the lady. Are you still there?
Yes, I am.
Mm, okay. Uh, let's see. They said what? They said the financial year starts 1 March. If the year ends on the 29th February. That means the financial year started on 1 March 2023. So let's start here. So 1 March 23 to 1 March, I mean 20, no,
20,
March,
20.
what? I want to say 28th Feb, but that's not what I wanted to say actually. 28th Feb 24, but then a March salary has been received. A March salary has been received. So you see, if we have to calculate the months that the increase started, so the increase start from one Jan actually, sorry, 1 Jan to what? To to March. To March. So that means there's an increased amount of 1,000 rand for what? For 3 months, okay? For 3 months, right? So for 3 months, this person has been earning whatever that she's used to plus 1,000 rand, okay? Whatever that
Yes.
she used plus 1,000 rand. So that means for 10 months, is it 10? Is it going to be 10? For 10 months, this person has been earning 100%. Okay. So this is what you're going to do. So you're going to let the amount that this person earns per month be equal to X. Okay. Be equal to X. So you're going to say, okay. So for 10 months, this person has been earning X amount. All right. And then we're going to add it with what? We add it with for 3 months, this person has been earning X amount plus what? Plus 1,000 rands. Plus 1,000 rands. Okay. Plus 1,000 rands. Okay. So it's going to be 10x, and then all of this is equal to what? All of this is equal to how much? They said 150.
When, so we are calculating for 13 months.
We are calculating for 13 months. This 159,000 that you're seeing here is for 13 months, okay?
Okay.
I get it. They said a salary for March include what? Include March salary.
Yes.
Mm-hmm. And then we're going to have what? We're going to have 10x because 10 multiplied by that is 10. And then we're going to have what? We're going to have 3x
3x.
1,000 rands. For 3 months, it's been n x plus 1,000. X plus 1,000. So
Perfect.
I put this in brackets. So for 3 months, it's been any x plus that. So it's going to be 3x. And then this plus that is going to, I mean, 3 multiplied by 1,000 is going to be 3,000. Sorry, I made a mistake. So it's going to be 3,000 is equal to 159,000. Okay. And then now we're going to take 3,000 to the other side. Say 10 10x plus 3x is equal to what? Equal to 159,000
Mm,
ne?
minus 3,000. Yes.
Minus 3,000 ne? How much is it? What is 159,000 minus 3,000?
159,000. It is 156,000. 156,000.
10 plus 3 is 13. So 13x is equals to 156,000. 156. 1, 2, 3. And then now we're going to divide every side with 13 because we want to know how much was the rent before, sorry, how much was the salary before the increase. So it's going to be 13x divided by 13, and then that is going to cancel that. And then what is 156,000 divided by 3?
It's 12,000. Month divided by 13.
Is
It's 12,000.
156. So it's
Yes.
12,000. So that means before the increase, the salary is 12,000. Okay. So that means uh this person has been receiving a salary of 12,000, but then from March, April, and I mean from January, February, March, he has been receiving 12,000 plus 1,000, which is 13,000. So that means this person has been receiving now is now receiving a salary of 13,000. So what you're gonna do now is to subtract the 13,000 from the 159,000, because it's not supposed to be in the current financial year.
Yes, ma'am.
How much is it?
Ma'am,
How much is it?
you said I said 20,000 divided by.
We are done dividing. I said 159,000 minus the 13,000. Remember, we got an answer here where we said this person before the increase was receiving 12,000. So after the increase, they said each and every January she'll be or they will both be receiving an increase of or increment of 1,000. So that means now this person is earning 13,000. Okay. So you're going to minus the 13,000 from the 159,000, because the salary includes a March salary, and March salary is not supposed to be included because it does not belong into the current financial year. Does that make sense?
Oh, yes, ma'am.
Good.
Okay, so ma'am, I got 14,000, 6,000,
What? 14.
14,000, 6,000. 6,000. 146,000.
You're killing me with your numbers. Hey, hi, Nalit. Is that 146,000.
Yes, ma'am.
Okay, so for Rosie, we're gonna have 146,000. And have I ever texted you on WhatsApp? Because I see we're running out of time. I wanna send you the question so you can complete it and send it to me.
Yes, ma'am, you ever texted me.
Okay, cool. I'll just send you the thing. I'm just gonna send you this and the completed part. This. Oh, actually, no, no. I'm just gonna send you the answer book and this questions over here, and then you just complete. You can even do the 2.3, okay? Then you can use it to practice, because this was part of your June exam paper for last year. Maybe you can get lucky and you write about Ezizinto. Okay. Do you have any other question?
No, ma'am.
No question. Okay, cool. It's fine. Good luck with your exam you said Wednesday or Tuesday? You said you're
It's on the 11th.
on the 11th. So 11th is going
Yes,
to be, because
ma'am.
this I'm saying the 11th is gonna be okay. Yes, yes, it will be okay.
It's on
Cool.
Wednesday.
Okay, no problem. Enjoy your evening. So that means we're gonna have another session before you ride. Okay, enjoy your thing. Just text me on WhatsApp, hey, and I'll send you the thing. Yeah.
Yes, ma'am. Yes, ma'am.
Okay, bye,
Thank
Nali.
you.